Lisa J. Stocks. I am a long-term buy and hold investor. I am in the building phase when it comes to building up my portfolios. I do both a mix of dollar cost averaging, DCA, investing set amounts on a regular schedule in order to build up my positions, as well as buying the dip, keeping my eye out for red days like we are currently having in order to invest more heavily because those dips give my money more buying power towards picking up those shares. On the day, the S&P, Nasdaq, and Dow are currently down, and so is SPMO. One of those investments that I am currently focused on building up. Right now, on a daily basis, I'm picking up zero point 0.1 shares, which depending on the price is around $12, but keeping an eye on the price in order to go heavier on the dips. So we're not going to do a deep dive into SPMO today, but we're going to take a look at some of the headlines related to the top holdings, which are dragging down this fund. Current stock price is $118.34, down 1% on the day. Year to date, up 24.56%. And for comparison against VOO, which tracks the entire S&P 500, to date, it's up 14.58%. This is an ETF that I recently incorporated in order to gain more growth in my portfolio. It's the Invesco S&P 500 Momentum ETF. It focuses on 100 of the companies in the S&P 500 with a high momentum score. Here's a look at the top holdings. We have Broadcom, Nvidia, Meta, JPMorgan Chase, Palantir, Netflix, Visa, Walmart, Oracle, and GE in the top 10. So I have other videos where I do a deeper dive into the details about SPMO, how it rebalances, the expense ratio, and things like that. I'll pin a video for more detail, but we're going to take a look at some of these top holdings. Netflix, currently down on the day 0.6%. Some concerns that investors may have when it comes to Netflix are a recent payment that they had to make to Brazil for a tax bill, which cut into their margins, a tax dispute that has a $619 million price tag. There are concerns about ad growth slowing, but some pluses for the company is that their revenue is up 16% year over year to about $11 billion. They have over 300 million paid subscribers, and they recently announced an upcoming stock split, which will also be drawing attention when it comes to the company's shares. Nvidia is currently down 3.42% on the day. And when it comes to recent news, they're dealing with some issues related to export controls. China reportedly is putting out a ban. So the government rules are going to limit what tech or products can be sold in certain countries. So this is bringing about regulatory risk, which is the chance that laws or regulations can change or damage a business. So basically, the stock price is reacting to the risk of losing that market from China banning foreign AI chips. NVIDIA is a leader when it comes to AI. We have to be ready for the ups and downs of the market, for these headlines and fears that may just be creating short-term drama when it comes to the stock. This is another one that I am also dollar cost averaging into. Now let's take a look at Meta. It's down 2% on the day. There's concerns around slowing ad growth and competition, but just like Nvidia, Meta is dominating with its family of apps, Facebook, Instagram, Threads, WhatsApp. It's feeling some of the same pressures as those other big tech companies. Now, taking a look at Chase and Visa shifting to banks and payments, Chase is up 0.7% on the day, while Visa is down 1%. The risk and concerns related to these companies are different than the others, not AI or streaming. They come from the economy, interest rates, the behavior of the consumers, We all know right now consumers are struggling. So, consumer spending is slowing, and there's a worry of loans that could go into default. So, we have to keep our eye on the news related to jobs and inflation, those type of issues that affect this sector. So, as we saw, many of those top names in this ETF are flat or weak today, but we have to be ready for that. Weakness doesn't automatically mean that an investment is bad. I'm steadily investing so that I will be in the market with my positions built up when the recovery occurs. Now, investing does come with risk. Not every investment will recover. I do have Meta, Netflix, and Nvidia in my portfolio, but I balance that by incorporating investments like SPMO for broad diversification, not only betting on one individual company. So if you're not already subscribed, give this video a thumbs up, hit that notification bell, and let me know in the comments, are you buying the dip or just steadily dollar cost averaging in order to build up your positions, or doing a mix of both like me? Thanks for watching. Okay, bye.